Good morning, traders. Today we are exploring the long straddle strategy, a powerful non-directional tool used by traders when they expect a price explosion but are not sure which way it will go. Mastering the long straddle, profit from volatility in crypto and stocks. Good morning, traders. Ever felt a massive market move coming but did not know if it would be a breakout or a crash? Today we are diving into the long straddle strategy. This is your secret weapon for high volatility. Events like earnings report or crypto upgrades. A long straddle is simple. You buy one call and one put for the same assets at the same strike price and same expiration. In the USA, platforms like Robinhood or Delta Exchange for crypto make this easy. You are not betting in direction, you are betting on movement. If the price rocket up, your call prints money. If it tanks, your put saves the day. To get minimum profit, you need the price to move further than the total cost of both premiums. The biggest enemy here is time, decay or theta. So look for low volatility periods before a big announcement to enter cheaply. Once the price swings, exit one or both legs to lock in those gains. Ready to trade. Let's look at the step-by-step process and some growth stocks to watch. Don't forget to like and subscribe for more trading playbooks. Practical step-by-step process in USA. Select your platform. For crypto in the USA, use regulated exchange like Coinbase via Binomial or Kraken if eligible. For stocks, use Cave or Robinhood. Identify the event. Look for a catalyst, e.g. BTC halving, Fed interest rate hike, or an earnings call. Find at the money. Strikes. Check the current price. If Bitcoin is at $95,000, look for the 90K strike price. Execute the order. Buy one call, e.g. $95,000 strike price, January 30th expire. Buy one put, e.g. $95,000 strike price, January 30th expiration. Calculate break even had both premiums. If you have paid $500 total, you need BTC to move $500 above or below $95,000 to start profiting. Exit strategy. Do not wait for expiration. Sell the position as soon as volatility spikes to capture Vega profit and avoid Theta. Time decay. Analyze specific crypto assets like Ethereum or Solana for a straddle setup. I am glad that was helpful since you are looking into the long straddle for both crypto and stocks. Here is a quick golden rule to keep in mind for your next trade. The volume check. Before you enter a straddle, check the fourth implied volatility. The goal you want to buy the straddle when fourth is low. Options are cheap and sell when fourth spikes. The price starts moving widely. The trap: if you buy a straddle effect, the price has already started moving. The options might be too expensive to make a minimum profit easily. Practical diagram visualizing the trade. Since I am a text-based AI, here is a simplified text map of what your trading screen should look like for a Bitcoin straddle. Plain text: profit scenario A, BTC strike rockets 0.1/5 price of assets, current price $95,000. Loss scenario B, BTC crashes. The fifth point: this is where you bought the call and put the wings. As long as the price moves far to the left or right, you make money. Your next step: to get started with the practical process, draft a checklist for how to spot a low volatility setup before an earning calls. Explain the short straddle, the opposite strategy used when the market is flat or boring. Deep dive into one of these three growth stocks: PLT or second hood, third VRT, to see when their next major volatility event is. Which would you like to explore first? Choosing the short straddle is a bold move, while the long straddle bets on a price explosion. The short straddle is a bold move, while the long straddle bets on a price explosion. The short straddle bets that the market will stay boring, flat, and quiet. In the USA, this is a popular income generating strategy for professional traders, but it requires carefully management because the risk is theoretically unlimited. The short straddle guide earning rent from market stability. While most traders are changing the next moonshot, smart money often bets on the market staying exactly where it is. Today, we are mastering the short straddle, the ultimate strategy for a flat market. A short straddle is the mirror image of what we discussed before. Instead of buying, you are selling both a call and put at the same strike price. You collect the premium immediately. Think of it like collecting rent on your capital. You win if the stock or crypto stays within a specific price range until expiration. But beware, this is a high stakes game because you have sold the options. Your profit is limited to the premium you collected, but your potential loss is unlimited if the price suddenly rockets or crashes. This is why we watch the Greeks, specifically Theta, which is your best friend, as it eats away the options value every day into your pocket. To keep your minimum profit, you must pick assets with low volatility. Let's look at the step-by-step process and how to manage the risk. Short straddle practical step-by-step in USA. Requirement in the USA: you typically need a margin account level 3 or 4 to sell uncovered or a naked options. Identify a quiet period. Look for stocks or crypto after a big news event has already passed when the hype is over. Check fourth rank. You want high implied volatility fourth that is beginning to drop. This is called a volatility crush. Execute the order. Sell one put, one call. Is a PLTR 75 $75 strike price. Sell one put, easy, PLTR $75 strike price. Collect the credit if the call is $3 and the put is the $3. You get $600. That means $600 multiply 100 shares. Deposit into your account immediately. Manage the trade, profit goal, exit. When you have captured 25 to 50% of the premium, don't wait for $0. Risk goal, set a stop loss. If the price moves more than 2, multiply the premium collected. Comparison diagram, long versus short. Future, long straddle, short straddle, buyer, seller. Market outlook, high volatility hours, low volatility boring, maximum profit unlimited, limited the premium. Future, long straddle, buyer, short straddle, seller. Future, long straddle, buyer, short straddle, seller. Maximum loss, limited the premium, unlimited. Maximum loss time, limited the premium, unlimited. Time theta hurts you every day, benefit you every day. Best used before earnings or news, after earnings of holidays, weeks. This is the news, table news. You could not understand. You will find out what is what. Screen, you will find out. You see the screen and you will find out. Management of minimum profit to ensure you get a profit in the USA market. The 50% rule. Most professionally sellers but buy a close the position once they have made 50% of the maximum profit. This reduces the time you are exposed to a black swan event, a sudden cross. Avoid expiration. Never hold a short straddle into the final Friday afternoon. To avoid assignment risk, where you are forced to buy, sell the actual shares. Would you like me to show you how to set an automatic exit order on a platform in like Robinhood or Thinkorswim, so you can look in that 50% profit while you sleep? Since you are ready to see how to actual automatic this, let's look at the hands of way to manage a short straddle in the USA using tools like Thinkorswim or Robinhood. Allows you to set limit and stop orders so you don't have to stare at the screen all day. The set and forget automation process to get that minimum profit without the stress. You follow a GTC, good till cancelled. Order strategy. Step 1, the profit taker, limit order. Immediately after you sell your short straddle and collect your premium, let's say you collected $600, you place a buy to close order at 50% of that price. Action, buy to close, price $300. Result, if the market stays flat, the options value drop over time. Once it hits $300, the system automatically closes the trade and you keep the $300 difference as profit. Step 2. The emergency break stop loss. To prevent the unlimited loss, we talked about you set a stop loss at 2 multiply the premium collected. Action buy to close stop market price $1,200, $1,200. Result: if a surprise news event happens and the stock price rockets, the system kicks you out before your account get wiped out. Visualizing the profit zone diagram. This is the imagine the stock price is ball bouncing between two walls. Profit capital $600 plus you collect this a start. Stay in this zone. Profit shrinks. The price moves to for $70 or $75 or $80. Lower break even, upper break even, target price. As long as the price stays between $70 and $80, you are in the green. Time theta is the wind that pushes the ball toward your pocket every day. 3 growth middle cap stocks, equity shares. As of December 2025, these mid cap companies shows strong momentum and growth potential. Company name first, market price, current market price, next column, and third column is target price. This month, not this month, 2026 year. Growth description. Company name is Palantir. Present price is $75. Target price is $105.00. Transitioning from government heavy to commercial, AI scaling their AIP platforms is seeing massive enterprise adoption in the USA. Company name is Robinhood, second one. Current price is $35. Target price is $52. Capturing the massive shift in retail crypto trading and 24-hour stock market assesses expanding international margin. Third one, Vertiv Holdings. Market price is $120. Target price is $165. A pick and solve play. VRT. For AI, they provide cooling and power systems for data centers. Demand is currently outstripping supply. How they grow? TLDR. Through high margin software renewals and expanding their sales force to reach mid-tier US corporation. Next company, Hood. Growth is driven by transaction volume in high leverage production, that is options crypto, and their gold subscription model. Third company is VRT. Revenue grows as big tech, Google or Meta, builds more physical infrastructure to support LLMs and generative AI. Final steps for you. Before you place a real trade, I recommended 2 things. One thing is paper trading. Most USA brokers like swap offer a paper money account. Practice the short straddle there for 1 week to see how the price moves. Check the calendar. Never sell a straddle today, the day before an earnings report, unless you have a very high risk tolerance. This video is for educational purposes only and is not affiliated with Google Ads. Please like, share, subscribe and comment. Another video is there, that is your art touchable video. What is that?
The long straddle strategy is a popular approach in options trading, especially when dealing with volatile assets like cryptocurrencies in the USA. This method involves purchasing both a call and a put option with the same strike price and expiration date. Traders use the long straddle when they expect significant price movement but are unsure of the direction. The profit potential is theoretically unlimited if the asset's price moves sharply, either up or down, while the risk is limited to the total premium paid for the options. By understanding these fundamentals, investors can better position themselves to capitalize on major market swings in the cryptocurrency sector. To implement a long straddle in cryptocurrency trading, begin by selecting a highly volatile asset, as significant price swings increase your chance for profit. Next, analyze market conditions, paying close attention to upcoming events or news that could impact the asset's price. Choose a strike price that closely matches the current trading price and select an expiration date that allows enough time for anticipated movement. Execute the strategy by purchasing both a call and a put option with the same strike price and expiration. Once your position is established, monitor price changes closely and be prepared to exercise the profitable option if the market moves beyond your break-even points, while allowing the other option to expire. Nvidia, Amazon, and Palantir are three notable growth stocks, attracting attention for their strong performance and future potential. Nvidia, a leader in AI and semiconductor technology, has benefited from rising demand for artificial intelligence applications, with analysts setting a consensus price target of $500. Amazon continues to dominate both e-commerce and cloud computing, with a price target of $4,000, reflecting its robust business model and ongoing expansion. Palantir, specializing in data analytics, has expanded its presence in the commercial sector, and analysts project a target price of $55. These companies are driven by technological innovation, expanding markets, and strong analyst confidence, making them compelling options for equity investors.
Thanks friends, and one is the very important, only creators Google Ads, subscribe plus grow your channel. This is the only creators, not all. And mine, please like, share, subscribe and comment. This is the mine. You please comment and share, subscribe. Thanks my dear friends. We will meet next day episode.